Hello traders and welcome to another video review. Today is Friday, January 16th, 2026. Let's take a look what do we have on the economic calendar for today. Not too many data releases during the Asian session. We start with German CPI released just a minute ago. German CPI in line with the expectations, 0%. Yearly CPI 1.8%. Bank of England Governor Bailey will give a speech at 11 o'clock. Then we have a monthly GDP tracker from the UK scheduled for release at 2 o'clock. At 15 past 2 there is housing starts data from Canada, and 15 minutes later Virgin Securities purchases are scheduled for release. 15 minutes past 3 there is industrial production data from the US. At 5 o'clock we got CPI data from the Russian Federation, and FOMC member Bowman will give a speech at 5 o'clock as well. So that's about it. Very light day in data releases. The major event of the day, German CPI, has been released already, 0%. So without any further ado, let's switch to the charts. We start with euro dollar. After the German CPI data, the euro dollar hit the level of 1.1616 as expected and broke below this level towards the lows at 1.1594. So right now 1.1616 will be acting as the technical resistance. And as you can see, this market, this level is tested these days, right now. So the next target after 1.1616 is this level here, 1.1545. And this is the next technical target for the bulls, because this is the technical support. So bulls should protect the support. Bears would likely move lower to test this level. So bearish outlook for the euro dollar. Cable follows the euro dollar and tests the level of 1.3367, new low 1.3361. So as you can see, the situation on the cable is getting more and more bearish. There is a gap here in prices, of course, towards 1.3310. So if the bears will pressure more, we might see very dynamic movement towards this level, as the situation here is quite obvious right now. This level here, 1.3390, is now the technical resistance, and all of the other levels are the resistance as well. So tight consolidation range, but if there are any news, any triggers, we should move lower, especially because the RSI is negative as well. So downside we go on cable. US dollar versus the Japanese yen continues the pullback after the bearish divergence was spotted here. We got the situation where test of the 158.20 has been done. Local low has been extended towards 157.99. So we are getting closer to towards this level here, 157.79, the major technical support, and the momentum is just below the level of 50. So very interesting situation. If we break further below the level of 50, this area might be tested. Even 100 periods moving average located at 157.10 might be tested as well during this downside movement on US dollar versus the Japanese yen. Okay, so that's about the currencies. Let's go to the precious metals. We are going to talk about gold. The gold is consolidating the recent gains just below the recent swing high at 4,639, as the momentum is moving a little bit lower towards the level of 50. So it's not a little bit lower, but it's getting down from extremely overbought conditions towards the level of 50, as there is the bearish divergence, right, between the prices and the momentum. It looks like the momentum is moving lower, however price doesn't move lower as whatsoever. So the bulls are getting ready to break out from this consolidation way higher. So please be prepared for another leg to the upside on gold. Let's talk about silver as well. Silver 4-hour time frame chart is looking bullish as well. Even if we switch to the daily, you can see that this commodity, precious metal, is getting very very much up, right? It's getting towards the level of 100 right now. Local high 93.44. Nevertheless, what I would like to say here is that we got obviously some sort of the bearish divergence. That during the up moves like this, very strong up moves, the divergence is very often kind of a first warning that the top might be in, right? So I'm not saying the top is in already, but temporary pause or temporary correction might be in play right now on the silver market, right? So we got this situation here. This is daily time frame chart, right? It looks like this is very aggressive, very strong trend. So on a 4-hour time frame chart, it is even much more visible. Better visibility here is something that might encourage you to rethink your situation on silver. Local technical support 86.15. The other technical support on silver might be located somewhere around here, I guess, 83.91. So at least two levels where we can go lower and then test those levels without any problem for the pullback. That's very good situation here, because the downside movement would be a few percent, I guess, at least a few percent. Let's take a look from the highs to the lows of this correction is -784, and if we hit this technical support, it will be -10%. Valid correction on on silver market this time. So please keep an eye on this level. Looks like the market might be getting the S&P 500 still inside of this consolidation, so there is not much to talk about the S&P 500. We hit the level of 6,886, bounce from it, and the market is getting ready to hit the 7,000 points level on S&P 500. And last but not least, the Bitcoin continues the pullback from the extremely overbought conditions after the local high was made at 97,925, so almost 98,000, almost $100,000, very close. Currently the most important level here would be, of course, the technical support at 90. This is 90, let's say 4,789. So as long as we trade above this level, the outlook remains of course bullish. We might get a little bit lower towards the level of 50 on the RSI, and then we need to wait patiently and see whether there is demand on this technical level, technical support. If there is the demand, next target $99,100 for the Bitcoin. If there is no demand, then we go down straight on towards 90. There is first somewhere around, let's say, 92,000 and then $90,000. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.